All right, I've taught you guys many things since this class started, and there's still so many things to share. But there's something I need you to understand that the syllabus we're actually working with has been um, has been prepared in such a way that everything you need to know to be profitable, you know, is included. Everything. So much so that if all that you know is all that you are taught, or is all that you are taught is all that you know, you will be profitable in trading forex market. I repeat, if all that you are taught is all that you know, you will become profitable in trading any financial market anyway. Now, why did I say so? I see, I've been training people since 2019. I've had students from all walks of life. I had students, I've had, civil servants, I've had businessmen, I've had bankers, I've had a lot of people from everywhere. I've had elderly people and I've had teenagers, I've had secondary school students, I've seen everybody. The problem that I observe generally with those who are not profitable in the financial market is that their minds are clouded and crowded with multiple strategies they find everywhere and every place. They come online today and find a strategy, and then they try to study it for like two, three, for a couple of times, and then they discover, oh, the day the strategy is no more winning for them. They're looking for another strategy. They think there is one only great strategy that does not have a downside, and there is nothing like that in the forex market. There's nothing like, oh, this is my strategy gives me 100%. There is nothing like that in the financial market. All I want you to do is that whatever I'm teaching you now, just learn it. Don't forget that it is one thing for me to teach, it's another thing for you to learn. I do the teaching, you do the learning. And I also understand that many of you are in the period in school where you're having tests, some are in the exam period, no problem. Just make sure you are following the trend. Just follow that you're following the teachings gradually. Create some time, 30 minutes, 1 hour, just watch the video, practice it on your phone. And if you have questions, always come to the DM, because in my interest that you get it and that you make money, you are happy, your family is happy, everybody around you is happy. Okay. Um, so now I've already taught you trend line trading strategy. It's called trendline bounce. That is a situation where the price keep respecting the trend line that you have already drawn. If you are if you go and watch the previous video, especially 2 to 3 videos ago, you understand what I'm talking about. I've already shared, I've explained that extensively. But in the you know, last class I started talking about trendline breakout. And trendline breakout is very powerful. It is powerful. This has fetched me money, profit in such a way that I can't even explain it. It's powerful. It's powerful. Why is it powerful? It's a potential signal for trend reversal. You know why? Because as a professional trader and a profitable trader, your goal is to catch the trend right from the very beginning. Right from the very beginning. Right from the very beginning. So trendline breakouts in most cases give you signal that, listen, this trend that we are following have been bouncing from this trend line is about to reverse. It's about to reverse. And a professional trader is always anticipating to catch a trend from the very beginning. That is the goal of a professional forex trader. He wants to catch trend from the beginning. You want to catch it from the beginning of an impulsive moment, and before it ends, you want to come out. That's a day trader. But you see, the goal is to catch a trend from the beginning. Even as a swing trader, you want to catch the beginning of the reversal at the very beginning. You want to catch the reversal movement from the very beginning. That's the goal. And trend line is one thing that can show you, that can help you to determine that. Number two, it signals the start of a new massive price movement. Why? Because when you draw a trend line, and from obvious, like the one I was teaching you the other time, when we're talking about the significant trend line. I mean, when you draw a trend line from significant troughs or peaks, by that I mean obvious troughs or peaks that are on 1 hour time frames and upwards. People are looking at that from all over the world, and as soon as it breaks, people are seeing it. Everybody is jumping in, so much fun is pulling to the market, and then it moves. So everybody's People all over the world, professional traders all over the world, they use trendline trading, trendline breakout trading strategy, and it's powerful. So therefore, trendline breakout strategy worth giving attention to. Please don't joke with what I'm teaching you here. It will change your life forever. It will change your life forever. Now, TLS, I mean trendline strategy, and TLBS, I mean trendline breakout strategy. Both of them have tendency of giving you early entries and plenty pips in your favor. This they can give you pips in their thousands. For example, if you have an instrument that trends a lot, imagine gold, imagine Nasdaq, then imagine GBP USD, imagine USD JPY, imagine USD CAD. And then if you come to derivative synthetic indices, you imagine volatility 75, imagine volatility 100, imagine step index 200, imagine, crash 1000. You know what I'm talking about? And then it's trend line breakout strategy helps you to know, hey, oh boy, trend, the current trend is getting exhausted and is about to change, it's about to reverse. That's what that what trend line breakout strategy does. So when you combine both of them together, they will work like magic. You know, imagine when you're following trend line trading strategy, and as long as price is above the trend line on an upward trend, you are keep buying, you keep buying, you keep buying. And remember that trend line is breaking out, you are looking for opportunity to sell, to sell. The same thing happens when there's a downward trend lines. When the price is still respecting your drawn trend line, you are looking for a sell, looking for a sell, looking for a sell. But when it breaks to the upside, your bias changes immediately, and then you want to start buying. Don't worry, I will show you all of that in the chart. So when you combine both of them together, they work like magic. They are complementary to each other. For example, if I draw a trend line and I'm expecting a bounce, and bounce didn't happen, and then the price breaks out. So if I'm expecting a bounce and I did not see a bounce, definitely there will be a breakout. Either of the two, one of them must happen. So and that's why the combination of them work like magic, and they're very complementary to each other. Now, trend line strategy is a trading system based on the obedience of trend line. Why the opposite is the trend line breakout. When the price break through a drawn trend line, when you draw a trend line and price break through, don't forget to see, I showed you this the other time, the four setup to look for in trend line breakout strategy. Okay, I showed you something like this the other times, and this is the first group, this is the second group, this is the third group, this is the fourth group. When trend line breaks out from here, trend line is breaking out from here now, immediately that's immediate breakout setup. You as soon as when you draw your trend line like this, and then price breaks out of it, you can draw your trend line on any time frame. Actually, any time frame, people can even draw trend line on 1 minute, 5 minutes, 15 minutes, and then 30 minutes, and 1 hour, then 4 hours, and daily, and so on and so forth. So when you draw your trend line, you join two higher lows, you join it together, and then at the third point now, price is breaking that trend line. At the immediately the candle closes below, what you're going to look for is that you wait for the candle to close below that trend line on an upward trend line, then you take your sell immediately. You just you sometimes you can set a sell stop, in the sense that you look at 1 or 2 pips, few pips below the candle that closes, that break the trend line. You set your sell stop, and then you put your stop loss. Don't worry, I'm going to show you all of that in the chart in a moment. And then you put your stop loss, just above, you know 3 to 5 pips above the candle that broke the trend line. Then you allow it to go. Sometimes then you set to take profit. Take profit is within the immediate, obvious swing also. And then this is the immediate breakout. Then you see breakout and retest, breakout and pull back, or breakout and retracement. So price actually broke the trend line here and came back to retest it before it continues in the downward direction. That's the second setup. The third setup is the buy. And then when the price immediately breaks out to the upside, it breaks out immediately, then you enter from here, and then you put your stop loss below that candle that broke the trend line, and then you watch it grow. Or you see another scenario where price broke the trend line and then it came back to retest it, and move in that favor. I've already shown you in the previous example too, and then let's see some example here. Look at this line. Point one, point two, lower high, lower high, lower high, lower high. then price broke it from here. Look at this one. This one broke out and came back to retest it. See this red candle came back to retest the trend line before continuing in the upward direction. So I have my lower high, lower low. Then I draw 2 points. Then it breaks to the it breaks it out. Normally at the breaking of this candle that closes here now, I will set I will have taken my entry to buy or set a pending order of buy stop from here. Then the price triggers it. Then as the price got to this place, it came back to retest that trend line, and then it's going to the upside. This one is breakout and retest, breakout and retest. And then you see the next point is this. Look at this too. I've drawn my trend line and my upward trend line, point one, point two. I join it. Then the price broke this thing. Normally I'm supposed to set my sell here. This candle that broke this trend line, few pips below it, I sell my sell stop. My sell stop here, then price got there, it triggered, then it began to go down. It began to go down. This is very, very important. Please don't joke what I'm teaching you here. I will need you to go back to your chart and look at all of these. Just start drawing trend line anywhere you see it. Just draw it on any time frame. Just draw it and watch how price react to the trend line when it obeys it and when it breaks it. When it breaks it, very, very important. Look at another example here. The trend line is breaking out. As soon as it break out, your pending order is here. Buy stop is here. Then price triggers it. Came back to retest the trend line again. This is breakout and retest. Came back to retest the trend line again. And price going in your favor, in your direction. And this is remarkable. This is remarkable. See, trading forex market is not difficult. You just need sufficient information. Sometimes the information is very few, but you see, it, it's not really, it's not really about it's the human feeling and emotion that usually affect people. Number one, they want to learn so many things, many strategies. You don't need so many strategies. And honestly speaking, one strategy or two, in fact, one strategy is sufficient to make you profitable in the market. Well, what this thing has to do with emotion, the psychology. Human beings, they just want something complex so that they will feel like, boy, I'm a forex trader because I know complex things. Complex, you don't. It doesn't have to be complex. I've known people that this is all the setup they are. This is all the strategy that they know. They just trade trendline breakout or trendline bounce. Are you hearing me now? You just trade trendline bounce or trendline breakouts, and they have been profitable for years and years. You don't need to know plenty things. Just know very few things. But what the very few things you know it very well. Please know it very well. Okay, so let's go to the next example. Or this example too. You see my point one, my point two, my point three, and then here now it breaks out and then it moves in my favor. Let me show you another example. Look at this one now. Trend line breakout. I've already drawn my trend line, pom, and then it breaks to the downside. It breaks to the down. It broke out. Immediately it breaks out. Now look at something now. This candle that broke this candle now, it's is long. It's long. So because if you enter here now, your stop loss is going to be somewhere around here, somewhere around here. And if you enter your sell here, that gap is so wide. I will not encourage you to take yourself from here, taking yourself from here. No. So what do? Allow for a little pullback. Allow for a little pullback, and then you can continue. When you now say that price will continue, you can, for example, I can draw another trend line. So this is PowerPoint. I'm not sure I'll be able to draw here now. Okay. Yeah. Can I draw a line here? Let's draw a line, but don't let me take so much time here. Don't let me take so much time here. But I'll draw it for you on the chart. So you can draw another trend line here, and it breaks out here. Then you take your sell, and then see how the price is just going in your favor, and then you're cashing out big. You're cashing out. So this is trend line breakout strategy. It's powerful. It's remarkable. It's amazing. It's profitable. It's price action. It cannot be manipulated. Okay, and I'm not saying the trend line will work 100% of the time. No, there is nothing like that. I have a strategy that works 100% of the time. There is absolutely nothing like that anywhere in the world, except somebody wants to deceive you. But we have highly effective, profitable strategy, and one of them is the trend line bounce and trend line trading strategy. Are we together now? Now, pay attention to significant trend line because market moves far and fast when significant trend line is broken. I think I told you this in the last class. Significant trend lines are the ones drawn up from significant peaks and troughs found higher time frames, like 1 hour upwards, 1 hour upwards. The more times the trend line is obeyed, the stronger it is, and the market move fast from it when it's broken. I like this. I like this. And that's going to take me to what I actually prepared to teach you today. Now, let me read that to you again. The more times a trend line is obeyed, the stronger it is, and the market moves fast from it when broken. Let me read that to you again. Please pay attention. The more times a trend line is obeyed, the stronger that trend line is, and the market moves fast from it when it is broken. That takes me to uh, you know one powerful thing I want to reiterate today because of the effectiveness of it. Now, gentle trend lines are more reliable than steeper ones. Gentle trend lines are more reliable than steeper ones. The steeper the trend line, the more unreliable it may be because price may not be able to sustain the steepness. Okay. So point to consider: wait for the candlesticks to close at the top of the trend line. Just like I told you, when you draw your trend line and price get to the place, and you're on 1 hour time frame, just 1 hour, 15 minutes, 5 minutes, any time frame. Wait for that candle to close. Wait for that candle to close. When the candle closes on your chosen time frame, a note so that you can avoid false breakout. That's the reason why I want the candle to close. Even when the candle closes too, there's still possibility of having a false breakout, but you'll be on better chance. So allow that candle to close. A false breakout only look real but after forming a few candlestick reverses and get you stopped out with a loss or break even and continue to follow the direction of the previous trend. Don't worry, I'll explain that to you later on. Now, so how do you now enter now? So a few pips on top or below trend line. I just explained that to you that the moment the candle closes, if it's a buy, if it's breaking to the upside, if the trend line is down and the price is breaking to the upside, 2 to 3 pips above the wick of that trend line, set a buy stop. And if it's selling, if you draw an upward trend line and price broke it to the downside, and then few pips below that thing, you set a sell stop. you know you know and then next to that, wait for the candle to close at the touch of trend line on your chosen time frame, and then this is the same thing I've explained to you. Then place sell stop a few pips below or above the intersecting candlestick. Take note. Okay, I'm going to be teaching you something like this later on. Okay, set take profit within the previous significant swing. So you now look at what's the next swing now. I'll be setting my take profit there. I'll show you all of that in the chart in a moment. And then note the significant and obvious trend line draws global attention. I have explained that to you too in the future, that when you draw trend line, people all over the world, if you draw a significant trend line, people all over the world are watching the same thing and they're having the same bias. It means that much volume of money will be pushed to the market at that time. So it will drive market in your favor because everybody is looking at the same thing. So meaning majority millions of traders all over the world are watching for the price reaction at the touch of the trend line. So you should expect explosive movement, period. Now back to this that I started in the last class. 3TP 1WKD. This is one of my favorite strategies. Look at what I wrote on the top of it. A favorite strategy. A favorite strategy. I'm telling you, 3 touch point, 1 week of data. So this is the full meaning of 3TP 1WKD. 3 touch point, 1 week of data. And don't forget I told you something the other time here. Look at what I told you. The more times a trend line is obeyed, the stronger it is, and the market moves faster from it when broken. So this is what we actually want to do here now. This is what we want to do now. So when you have a trend line that has been respected multiple times, a trend line that has been touched multiple times, when such trend line breaks, price usually move a great deal away from the trend line from the trend line that was broken. Now let me show you a few examples on the chart. Now let's look at this. This trend line has been obeyed. The 3 touch point minimum of 3 times that the price has touched the trend line and obeyed it. That's what I mean. 3 touch point minimum of 3 times. Price has touched the trend line here and obeyed it, touched the trend line here and obeyed it, touched the trend line here the third time and obeyed it. Then it breaks out here. It breaks out. So when price breaks out here now, you're going to be entering you're going to set your stop loss below here at this price of 1.35380, somewhere around here. Let me draw this. Okay, you'll be drawing, you'll be selling here. You'll be selling your sell stop around here on this price now. Then your stop loss is going to be above this candle that is taking you in, above this candle that's taking you in, this candle, and better still, you can put it there. You can put it there. And so price begin to sell, begin to sell, begin to sell, begin to sell. The moment price moved into, so what will now be your take profit? We said the next swing, the next obvious swing, like somewhere around here, somewhere around here. Sometimes price may not get there, somewhere around here. Before the end of this, now within the first obvious swing, your take profit will be within the next obvious swing. Let me show you where we set to. I said set your take profit, your TP, set your TP within the previous significant swing or trail your stop loss. So what we are saying here is that next, previous obvious swing, which is here now, it can be here. This is also an obvious thing. It can be here, it can be here. If you enter, it can be here, it can be here, it can be here. And this is a very good place. So, or you trail your stop loss. Trailing your stop loss, let me quickly explain that to you. How do you trail stop loss? For example, if I've entered a sell here and price move, the moment price move to this side, I'm seeing a swing here. So I'll move my stop loss from where it is, I'll move it here. Price move down again, I'll move it there. As price is making a pullback, and returning, is forming resistance, I will pushing my stop loss here. I will drag it there, then I will drag it there. In that case now, I'm not setting a take profit. I'm only trailing my stop loss. It is called trailing stop loss. Look at it there now, or trailing stop loss. Trail your stop loss. To trail your stop loss means you did not set a stop loss. We're just following the price and following it behind. We're following the price behind. So I'll be putting my stop loss here, and then as price move down again, I'll put my stop loss here. Then the thing will cut me out here. The thing will just literally cut me out in this place. Then I'll be out of the market and looking for another opportunity again to enter again. So when you see 3 touch points, and then the beginning of the trend line, the beginning of the first touch, look at it here now. This date is 21st of July 2025. Then you see at the end, when the price is breaking out, is this is 24, though. It's not even up to 1 week. It's not up to 1 week. 24, 21st, 24. Wow, beautiful. But then usually I only like it when you have up the week of data. But whether you have a week of data, so far there's multiple touch, but multiple, I mean, 1 week of data give you a strong point, you understand, so that it not be just the news that is causing it. That's why it's required to have up to 1 week of data. So so that if it's not the news that is causing the fluctuation, okay. So now you have something like this, beautiful, and then you can take your trade and enjoy the market. So when you see multiple touch, minimum of 3 touches in the market, and price move in that price break that trend line, it is always good. It's always a good thing to take note of when that trend line will be broken out. Let me give you another example in this place. Please don't forget what I'm teaching you. This can make you a multi-millionaire even in dollar. Now look at this. The first touch, the second touch. Look at it here. I've drawn my trend line. Price is still moving up and draw my trend line. One of the reasons why I like this trend line breakout, especially when after the third touch, is that it signifies the beginning of a new trend, a reversal. Don't forget what we're saying in this place. I told you here now. I told you here. Look at it now. Where were we saying it? I think somewhere, okay, somewhere around here. Look at it. We say early entry. Okay. I think is in the, okay, is here. Is a potential signal for trend reversal. Is a potential signal for trend reversal. Look at it here now. Look at it there. Trend that has been buying before is now reversing. That means it has now started selling. The same thing happened in this place. The same thing happened in this place. This guy have been buying before. Breakout tells you it has started selling. It's a trend reversal. So important. It's so important. It's massively important. Don't forget it. You have to pay attention to that now. So when you see it, trend line breakouts help you to know that trend line, as you know, the market structure is changing, the market character is changing, and then you must pay attention so that you can make money in the market. And I told you, trend is your friend. So when you follow trend, you make money in the market. Now let's look at it again. So I have the first point, the first touch, second touch, and then I have the third touch, then I even have the fourth touch. And I told you, the more a trend line, let me take you to the theory again. Let me take you to the theory again. Oh my goodness, I love this. Let me take you to the more times the trend line is obeyed, the stronger it is. And the price moves, and the market moves fast from it when broken. The more times a trend line is obeyed, the more times the trend line is obeyed, the more times the trend line is obeyed. Look at it. The more time. And now we have many times now. We have when you have that 3 times upward. Now we having it 4 times here now. 1, 2, 3, 4. Price has touched this trend line 4 times and has obeyed it 4 times. Okay, and then the price is now breaking away from it. Price is now broke. Look at where price is breaking. Price broke it from here. That broke from me. And I told you, how do you set this kind of market? You move down a little bit and set your penny number. Your penny is supposed to be highlighted somewhere around there. You know that you click on it, you see sell stop, sell stop. Maybe I'll do a single video on how to actually say your sell stop. Then you put your price to be here 1.35419, and then you put your stop loss. Your stop loss will be this candle that breaks it now, especially at this last swing. This last swing is the best place you can put your stop loss. Stop loss is there. Then where will be your take profit? Your take profit is supposed to be your next obvious swing. Your next obvious swing is supposed to be somewhere around here. Somewhere around here. It can be here. This is an obvious swing. It can be here. It can be here. It can be here. Okay, so imagine you put it here. Imagine this kind of money that you have made massively. So, or you better see you trade your stop loss. As price move down, the first thing you will do is you will break even. Break even means you move your stop loss to your entry price. You move your stop loss to your entry price right now. At that time now, no profit, no loss. You can just walk away from your computer and be watching the market. So before you know it, price is moving. As price moves down, move to this somewhere around here now. You put your stop loss to the last swing here. Price move down a little bit. Price get to this side. You move your stop loss to this place. Price get down far into this place. You move your stop loss to this place. That they call trailing stop loss. And the price move down again. You move your stop loss to this place until eventually price takes you out, and then you will have cashed out. Because when you lock money like that, you cannot lose it again. The moment you are shifting, as you are shifting your stop loss, it means you have locked that money, and there is no way anywhere in the world you can lose the money again. So when price reverses and touch and hit your trailing stop loss here, then market will close you out. Then your profit is added to your account. They can go and withdraw it and buy your Ferrari. Okay. I'm gonna buy a Ferrari. I like it. So this is trendline breakout strategy. I've explained it before. I'm reiterating it now. Watch this video again and again and again and again and focus on it. Go to your so now let me give you an assignment. You will take 5 instruments: GBP USD, USD JPY, gold, USD CAD, and all 5 instruments, 5 currency instruments, and 5 derived synthetic indices. You will show me 3 touch points where 3 touch points happen and price reverses. So what you do is you draw your trend line, at least 3 touch points. It can be 4, can be 5, can be 6. So you put your entry, you show me your entry by a green color, and then entry by a green color, and then you put your stop loss somewhere around here, and then your take profit will be, you just choose any swing. Any swing can be here, it can be here, and it can be here.